Gee whiz, I pressed start and everything blew up. Don't press that start button. Holy smokes, eh? Look, I gotta restart everything. TF, huh? Will this work? I think I have to reload everything, but let's see if this works. Yeah, that works, and that's the one I don't want to play. How funny is that? All right, hang on. Changing font size in the chat room so I can read it better. You gotta redo everything. All right, so how are we doing? You guys hear me? It's weird. I hit record and then everything blew up. Cool. So we got colors. Okay, I gotta do the intro. Wow, that was fun. Intro. I click this. Hopefully this doesn't blow up. La 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 la. All right, so that was our beautiful introduction. There's a desktop. I got to read a disclaimer now. Did you guys enjoy that introduction? You know, get the director and doing his stuff. Like, we're getting ready for the big show. Yeah. Cool. Hey, let me remind you that trading's risky. You want to? No, let's do the long. Let's do the long one. Welcome to Forex.Today. Let me remind you that the purpose of this presentation is education. This is not an alert service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing, risky business, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. Throw your diamonds in the sky. I'm here to share my, 15 years worth of trading experience with you so that you can learn from my successes as well as failures, so that you can just jump ahead quickly, find your success on a smooth glide plane. We do these sessions Monday through Friday here at Forex.Today, starting at 7:30 in the morning, because it's a couple hours before New York opens for trading, but it's also approximately London lunch. First Friday of the month, I'm over at FX Street, where I've been doing trade non-farm payrolls live every single month for approximately 12 years. Trading Forex in the most volatile moment of trading, month after month, for 12 years. That's longer than most gurus have been even trading. Boom. So anyways, good to see you. Boom. Boom! So here we are. Got my school colors on. I got an examination later this morning. I just want to get a good score on the production possibility curve. Okay, let's go. Where do we want to start? Where? How about top left? What is this? What is this? Where are we? What's going on? Pound dollar. Well, I believe we were stuck in the middle with this one. Is that right? We're basically neutral in this. We had a bottom here. We had a top. So I guess you could go kind of like this. But you can clearly see there's something here. So I don't know. It just seems that there must be something better to be doing. But if you were going to trade it around to the top of this range, that makes sense to me. I think that's where we left it off. That makes sense to me. I don't necessarily like it. You know, I guess if we were to hope, it would find support now to get to the get to the top here. Let's do it this way. Clear. So it spikes up, comes down, hits the pivot cluster support, and I don't know, works its way up. Okay, I think that's best case scenario. What do you mean no chart? Really? It says you have charts. It's there. All right. Sorry, Daniel. Oh, now. Okay. Okay. So anyways, I think that's best case scenario, right? And I think worst case scenario, kind of nothing happens. And we just wedge this for the whole week. Or even worse, come down here and then go back into the range. I mean, I guess that's worst case scenario. Down and then back into the range. And you're like, whoa, because I say worst case because some people take that as a trigger to sell. So that's how I'm feeling on it, sort of in between. This doesn't look good for a long entry, but that's what you'd be hoping for. Maybe on a smaller time frame. Yeah, I could. Yeah. Right? Yeah, it could. Ugh. So maybe. Maybe. There's got to be something better to do through that. All right. So we talked yesterday. I showed you, I think I was up 400 pips for the day plus the 100 pip profit I had already taken. So 400 was floating. And I cried a little bit because I was overexposed to being long euro. Hey, euro's going up. Nice. That's when risk is good. When you're making money, that's good risk. Nice. So I've since moved my stops from break even on these two trades to just below the lowest low, and maybe she starts working her way up to the R1 and then to the M4. Don't really, do we have questions? I don't think so, because we covered all of this yesterday, right? Yeah, the trade plan was crazy complicated. I bought it at the weekly swing entry. So I did just what's in the training course. I bought it at the weekly swing. And yeah. Yep. No questions, right? Cool. Oh. So again, the entries are down here, stops are here, prices here. The move so far from top, come on now. Move so far now from the bottom to the top. 150, 147 pips. Is that right? No, it's the other way. 80 pips. La la la. Cool. Nice. There will be, yeah, and you know, for those that are eyeballing it, it's, yeah, there's a lot going on up here. If you're going to play it as a range, it's not a bad idea. But you know, the well's been poisoned with my opinion, right? Last week I thought we would test where my stops are and work our way higher, right? And now that we're basically through the M3, if I'm a bull, right? If I'm a bull, clear this out. This makes sense to me. This makes sense to me. This makes, excuse me, sense to me. Having it kind of crap out here, I mean, it could happen, there's no doubt. Especially in that zone, no doubt. It's just, I'm not worried about it. It can't be. I got lots of things to worry about. That just can't be one. So at some point, I say to myself, well, I got profit locked in on 2 trades. What do I care, right? So I don't know. Just let it run, man. It's just a thought, right? I mean, should I bail now? I mean, is there evidence for me to bail now? No. So, you know, there's not much more for me to do. It is overbought on the 15. It's overbought on the hour. It's got some room on the 4-hour. You know, you're right. There's a lot of resistance there, but I'm kind of going for this. I mean, this is the ultimate one, right? It's the M4. So, gee whiz, I did all the hard work now, right? So now I just need to be patient. Might take all week. Yeah, well, I'm not saying I'm right. I'm not saying that's the right thing to do. What I'm saying is I made the good entries. I bought at the M2 like I'm supposed to. I moved my stop after a test of the central like I'm supposed to. I'm doing everything right and I'm making money, so I just have to leave it alone now, right? USD CAD I'm neutral on. Just where it opened yesterday and stuff, there wasn't a place for me to grab it. It opened high. The only thing you could use is moving averages. And so, yeah, it's weird, right? So I think what I said yesterday is I'm neutral. I'm bearish on both. I'd like the Canadian dollar to strengthen against this USD, so that would bring it down. But I don't know. This is a great place to sell, though. If you're bullish on oil, that is pretty cool. I just don't feel good about it. I don't know why. Okay, but that's a cluster. It's not the greatest cluster in the world. So it's one of these things. Keep your eye on oil, but I'm not sure about it. I think oil is fairly priced, and there's no supply and demand issue for it to fall, right? USD Mexican peso, I'm still short. Am I making money on it? I'm about break even on USD Mexican peso. Look at that, I'm up 615 pips though. So yesterday I was up 400 plus the 100 I took out of the market with 400 floating. So I made 200 pips today. It's pretty good since I've done nothing. So anyways, this one's at break even. So, we'll see. What's going on here? Oh, this is the Turkish lira. Let's go in on the smaller time frame. Boop, boop, boop. So I'm short Turkish lira right here. And it looks like It looks like it's appreciating. Yum, yum, yum. Yum, yum, yum. Yum, yum. Gee whiz. Yum, yum. Yum, 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 yum. Doesn't that look good? Mm-mm. That looks like some good lira. There's it way up here, don't I? Anyways, yum, yum, yum. Tasty, tasty. I think I have the stop like way up here, don't I? Because I did it on a weekly chart, I think. Oh, it adjusted? Okay, good. Okay, good. So I can't lose money on the Turkish lira. Love that. So we got some exotics today. And then, yeah, this, let's get rid of that because I'm, okay. So now what? It's trying, right? You got to give it a try. This area here I highlighted yesterday when we were up here as the buy zone, and a second opportunity down in here, and we haven't hit it. Too bad, so sad, right? Looks like a 50% drop from the peak to valley. So somebody knows what they're doing. They're just not swing trading off the pivots, that's all. So if this continues high and higher, you know, then you're going to want to look at that USD CAD falling. Remember, it's up at the weekly M3, monthly M3 cluster. Yeah, we'll get to the Aussie. Yeah, hang on. I guess we can do that now. Starting top left. The weekly swing, I bought it at the weekly M2 like I'm supposed to, straight out of the swing trading course. So this trade since yesterday is now 100 pips. Cool. That's just straight up doing what I'm supposed to do. I was complaining yesterday that I'm overexposed to euro. I didn't necessarily, I mean, I think dollar's going to weaken, and I can see euro getting strong. And I know that's counter to what everyone else is saying. But it doesn't mean I want to buy it. I do want the dollar to weaken, the US dollar, right? I do want the yen to weaken. I do want the Swissy to weaken. So I don't know. So it's kind of cool. I kind of feel like I just did what I was supposed to do. Well, John, that's just a swing trade. So it's like, what's going on in my mind? It opened at the weekly M2. I mean, that's it. It's straight out of the swing trading course. That is a buy. There's nothing else to it. So I kind of went, so I bought it. And it's just doing a weekly swing. So, yes, I'm bearish on the dollar. Yeah, I'm not really bullish on the euro, but obviously a lot of money is going to go to Europe. It's just cheaper opportunities. That's just a swing trade. It's like I don't even like it, but that's what I'm supposed to do. Same with like 2 or 3 of the other trades. They're just swing trades. So it's not even like a big, what did I decide to do? How did I come to grips with this big, deep insight? Oh, well, it had to do with New York, right? So the decision was, give it some time, see what New York does. It played it off the pivot. So, yeah, it's fine, right? So another thing I could do is move stop. So that's all it was, right? I had to stop at break even. So it's like, if New York takes it north, I get paid. If New York brings it down, I don't want to. I don't want to overtrade it. If the market's going to collapse on me, I'll lose nothing. If the market moves sideways and we just go from first level support to first level resistance to first level support, I lose nothing. If it goes up, I make money. James says, with limit order as well. Well, that I actually pulled the trigger. I mean, this is what I do Sunday when the market opens. I swing trade, right? But I've taught most of you guys how to do that already. So it's just, yeah, it's mechanics. It's just mechanical. It's right. It's supposed to go up, so it did go up. Oh, Aussie. Let's change this. Aussie, this is where we painted the bottom. Remember, it went a little too low, recovered. Is that right? No, I was thinking of a different pair. It didn't go too low on this. But nonetheless, do you see this bottom that I had taken? It looks like a lot of liberty to paint out for you. It first starts at the monthly swing. No, I generally don't enter with limits. I like pulling the trigger. It's just something about me. I like, I like to look at the eyes and then stab it in the heart. I like pulling the trigger. I like being involved. Right? So it's like one of these things. So when the market opens Sunday afternoon, I'm at my laptop or on my phone, or well, not my phone because I don't have pivots, but you know, I'm swing trading. But again, it's just that's what we're supposed to do, right? I don't find it like a major breakthrough or something. When the market opens, I'm supposed to swing trade. So guess what? By and large, I'm swing trading, and it's really clear where the buy zones and sell zones are. And right, so anyways, going back to this is just again a monthly swing. We bottom out at the M2, so I know that's supportive. If you look left, it's supportive. It rallied up. This is one of those 1, 2, 3s that, I mean, it didn't fail, but generally it's supposed to go north. It's supposed to do this, right? The textbook, the Wayne McDonell textbook, I guess it is, right? The textbook of hard knocks. It's supposed to do this. You can see I even have it drawn out. And this happened on, I think, a different pair as well, right? So it came all the way down, it did a 786 and took off. But if you put your stop where you're supposed to, right? Our stop's down here, right? So it's not a beautiful trade, but it is a monthly M2, which means this is supposed to go up all the way to monthly M4. Monthly M4 is like way up here, right? So with that in mind, the first buy that I have is I bought in that buy zone, the 1, 2, 3 after the bottom, right? After the higher high. So the bottom is 1, the higher high is 2, and the 3 I'm supposed to go long somewhere between the 382, 618, and roll reversal area, which is here. That's where I'm supposed to go long. I'm supposed to put my stop here, which I did. and then went up. And then I think, I can't remember, was it some support going back like a month or something? But you can see I bought it here. Again. But again, it's higher high, higher low, roll reversal. And I just entered basically a second trade, on a smaller time frame, of course, but I entered a micro trade into a macro trend. So I'm long and profitable here, I'm long and profitable there, and something like that. This one is a little bit trickier. It's really, I must have done something more like there, but you know, I don't like it as much. But you know, I'm trying to, I gotta make some pips going to the end of the year, right? So I'm kind of pushing a little bit. Okay. It's trying to make a dollar out of 15 cents. You know what I'm talking about? Yeah. Dan says, can you consider the moving averages dynamic support when price closes above it? Well, how can it be support if it's above it? Oh, wait, because, oh, price is above it. Yeah, well, that's what moving averages are, Dan. Dynamic levels of support and resistance. So, yeah, trying to zoom in here and see if there's an example, right? So the price action here is higher, high, right? Up, 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 down, down, buy, 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 up, 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 right? Pretty simple stuff. And then the moving averages, once you get a more of a breakout, you can see this is a bottom, and then this is kind of a kind of after the fact indication, but this is a higher high out of a range. So if you're trading the smaller time frame, as an active trader, you would have had it measured like this and more like this, right? And so once you break out, yeah, then you can use these moving averages, right? And you're using price action off the EMAs. Okay. But my problem is a lot of people start doing this with no plan. Okay. So they're just pure tactics. I like to start here and say, this is going up to monthly M4. Then I think the rest is easy. Okay. But if you're all tactics, I think you can get suckered into selling an uptrend. You know what I mean? Well, it's not just the fundamental bias. You have to have the technical market too, right? You have to have the market conditions favorable for trading your bias. So it very often, like if on higher time frames, the market does this, let's say on a 4-hour, the market's bullish, right? But in a situation now, actually looking at these candles, what if they did the opposite? What if you were in sort of this area and you find yourself selling, and then of course it's going to flip much bigger or much faster, and you're still selling this uptrend and you're just following price action, right? You're like, well, the price action tells me to sell. Well, you're so in the weeds that you know you can't see over water. So I like to start with the bias saying I'm only looking for bullish conditions. A breakdown is not a bullish condition, but a break up is. And a breakup would be something like this. This is a Okay. This is just sideways channel, right? Breakout. Back to the scene of the crime, long and gone. Okay. I'm not on this one anymore. I'm a little bit bearish on both, so I kind of ignored it yesterday. But you know that was an entry, right? Okay, it wasn't an entry here, but it was an entry in here. So I don't know. If it does something like this, I might buy it there. But I kind of want US dollar weaken anyway, so I might just tiptoe away from that. But that's very encouraging, especially if I'm short Japanese yen. It tells me the dollar and the yen are fundamentally to me are both weak, and so if it's rising, the yen is weaker than the weak dollar. Okay, so it doesn't hurt me. Beast. Okay. If you are a bull, oops, this is your buy zone. Okay. Now you might not have favorable market conditions, but one thing you could do is buy a dip, put your stop here, and risk very little. And hope for the best. It's not a very good strategy, but the one place on this chart you would expect to see support is here. Isn't that funny? The one place. Not here, not here, not down here, right? Not that price. You would expect it here. So a double bottom, maybe if you're lucky, you get the higher high, higher low, 1, 2, 3 thing. That doesn't smell like that'll happen today, right? If you're a bear, right, what do you want to do if you're a bear? I think it's way up here, isn't it? So that's where bears would sell. This is where bulls would buy. I don't know, man. It's pound. What do I know? What do I know? CAD, I'm sitting around waiting for oil to rise so that this will rise. Where's the one place of the swing trading course I would expect this to go up? And it's right here. Same thing as the pound. That's where I would think it would go up, right? Not at this price, not at this price, not at that 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 price, right? Or lower, right? Not that one, not that one, not that one, not that one, not that one. So back in what? May, when I made the swing trading course for you, we said this price. It's pretty amazing. Check. Crown. A crown. I think Aussie dollar, well, it would be the same as the Aussie yen, wouldn't it? And then how are we doing on this? Yeah, same sort of thing. A bottom on the monthly swing. I'm long just above it. I have my stop locked in 100 pips profit, and she's running to stand still near this resistance. No change, right? We were here yesterday, so there's just no change. Euro pound. No, why would I want euro pound? All right, well, euro strong. Pound is moderately weak. Oh, okay. Yeah. So if you were a swing trader, you were supposed to buy this, and you should be making money. It's again, it's sort of like those other trades. It's just so straightforward. I don't know what else to. I don't know how else to comment. If you don't know how to swing trade, I guess the only comment is you should take the swing trading course. Other than that, like if you were a bull, you would buy it here. If you were a bear, you would sell it here. So if you're doing other things, you're just not swing trading. And so, yeah, and I don't know why. When the moving averages and the daily pivot all converge, there's no telling where price goes. All right, so Dan, if you're in a situation where you feel like there's no telling where price should go, you should not trade. You should only trade when you're certain you're going to make money. You should be shocked when you don't make money. You're like, damn, really? Who sold it at support? How did we do that? That's weird, right? And they're like, you could have it. So yeah, if you're swing trading, so let's say you traded, okay, the market opened here and it closed here. It closed higher, which means the pivot point is supposed to rise, which means you may be a bull. So if you're a bull, you buy here and your target's here. And then you'll see you might even try to go for this because of that cluster, right? So to me, it's just a very, very basic swing trade this way. And, no different than any other week. Looked like it was arranged. Yeah, it's not good, right? It's not good at all. That's why I'm kind of like, well, I didn't want to cover this, right? So someone else is trading a pretty mediocre market, which is fine. It's fine. It's fine. It's fine. If you were a bull, you had an entry. If you're a bear, you had an entry. So if you got that right, you got paid, right? But if you're trading a longer term chart, you might be taking it off the bottom. So yeah, maybe it's not trending well, but you're buying it off the bottom. Okay. You might be uncertain about pound, right? You could also be a bear, and by way of me being bearish on the dollar, I'm bullish on the euro, and I keep telling people, even though the Fed's raising interest rates and the ECB's in quantitative easing, the worst of the cycle's through. We've troughed through the business cycle, and the United States is overbought, so money is going to Europe looking for deals. And I'm not really hearing this from other places, but it kind of makes me want to be long euro and short dollar, which I am, right? And I'm making money. And yet then the next day I'll read like on Bloomberg or on FX Street or something, you'll see like, I don't know, a big thing about, great review of the Fed hawkish, dollar weakens anyway. And I'm like, well, Who wrote that article? Right? Like, isn't the dollar supposed to weaken when the economy is good? And isn't the dollar supposed to strengthen when the economy is bad? Right? Like, oh wait, the textbooks tell you the opposite. Oh, okay. But still, forget the textbooks. Isn't that what actually happens in the real world? When the United States was when on the brink of depression, 10% unemployment, the US dollar was unbelievably strong. Now we're full employment. Full employment. Yeah, the dollar should be weak. Right? So I don't know. Whatever. It's only money. Do we have any major news in 5 minutes? I don't think so. I think it's BOJ and ECB, TCE and stuff. That's all later, right? That's tomorrow and Thursday, isn't it? Pedro says, does that only apply to the US? Yeah, it's a reserve currency. So Pedro, let's say you're a billionaire and you're in some horrible, horrible country. And to American, that means not in America. I'm Canadian though. But you're in some country, you got $1 billion. You're kind of worried about your corrupt government. You're kind of worried about your fault, your bank defaulting. You're just worried about your cash. So one thing you could do is you're worried about the economic conditions and the stability of your economy and the safety of your money. You can simply buy U.S. Treasuries, right? Backed up by the full faith of the United States of America. So what you would do is you would enter the foreign exchange market, convert your horrible local currency into the US dollar, and now that you have US dollars, you would buy US treasuries, and now you have your money parked somewhere safe. The supply of your local currency went up, so it depreciated. The demand for the US currency, since you're demanding US dollars, has gone up, so it appreciated relative to your local currency. Right? Because if you had cash in a bank, it's in a bank. If you take the cash out of the bank and put it into the foreign exchange market in exchange for US dollars, now there's more local currency and less US dollars. That's how that happens. Now that you're a holder of US dollars, you can buy US treasuries. You can lend it to the government. So in reverse, now you're like, I feel like everything's good. The economy is good. You got some business opportunities in your local country, right? The local government's going to build a new freeway. So since you know about it before it's been announced, you're going to buy all the farmland all along that road for super cheap. So now you need your cash. So you dump your U.S. Treasury, which means interest rates goes up. And then you take your US dollars and you throw that onto the foreign exchange market to buy your local currency. The US dollar depreciates as the supply of US dollars increase, right? And now your demand for your local currency goes up, so now you got it back to your local currency, which means your local currency has appreciated relative to the US dollar. And then you can buy all that land for super cheap from farmers and other people that have no idea your local government's going to build a freeway. But since your buddy works for the local government who tipped you off illegally, you're going to, I don't know, make money. And that's how you make money in poor countries, right? Scam poor people. Wow, that was quite a thing. Right, John? Whoa, hey, hold those horses. Well, in rich countries, they elect you to scam poor people, which is really weird. So there's an article, though, saying in poor countries, you're better off with a dictator that wants to stick around for a long time than someone that just shows up, rapes and pillages the village and leaves, right? Because a dictator that sticks around a long time can't steal everything because there'd be nothing to steal tomorrow. No, it's a real economic thing. You're like, dictatorships are not good, but you want a guy to be around for 30 years if he's going to be a dictator because he has to keep everyone poor but alive. So he can't, right? If some guy was just rolling through with tanks, he'll just take everything, kill everything, and leave, and you just got nothing. But what the world needs, guys, if you want the secret to growth, and growth and productivity leads to things like less childhood mortality, higher education, longer lifespan. All of that comes down to GDP. Okay? If you're productive, you live longer and you live a higher standard of living. Now, you might say, if you're around like Karl Marx time, Adam Smith's time, they'd say to get that productivity, you need to add capital and you need to have labor, right? Remember, those are the two factions, capitalists and labor. Capitalists are the ones that build the factories and stick machines in them. And labor are the guys shoveling coal into the furnace all day. Capital, labor, capital, labor, capital, labor. The problem is there's a diminishing return to this, right? So put it this way, if you're a farmer and you're planting your field by hand, you're digging in the dirt and planting seeds by hand. For someone to come along and say, well, here's a plow pulled by this horse, you're like, damn, I can plant so many more seeds now, right? But at some point, adding more and more machinery, that it doesn't add that much more, right? I mean, having, let's say, a plow is better than digging the field by hand or by hoe, right? Well, a hoe is better than a hand, but what if you get to like a plow and then the next thing is like a better plow? Well, okay, maybe it's not that significantly different from just having a plow in general, right? So, that's why wealthier countries grow more slowly. But what we found in a more modern economy, instead of just adding more capital, more labor, because again, there's these diminishing returns, it's a curve, right? Should I draw this, dude? I guess I should draw it. Why not? So how do I draw this? How do I draw this? Productivity, capital. So, right? So you have no tools whatsoever and you're trying to do a tough job. And some guy gives you a tool. One tool. Okay? Your productivity could go up significantly, right? And you add a second tool. It's pretty good. Add a third tool. Oops. Right? Add a fourth tool. Add a fifth tool. You see, this is more machinery and all this kind of stuff. What ends up happening, I don't know if I'm drawing this quite right, but the curve, oops, but the curve goes steep at first and then lower and then lower and lower and lower. Okay? You get to the point where you add, you go from 5 to 10 machines, but the difference now between doubling, right? So let's do it this way. No! Okay. So you added one tool and you got this much more productivity, right? And then you go from 5 machines to 10 machines. And the difference is this. This is 1 unit of capital. This is 5 units of capital, but here's the increase in productivity, and this is the increase in productivity, right? So there's a diminishing return. So the real success once you get to a modern economy. So this is what poor countries, you just give them some machines, and boom, productivity goes up big time. Because they have lots of labor, they have lots of poor people willing to work, but they don't have any capital. Well, then you get to a rich country, they have lots of capital, but they have hardly any workers. So you kind of need both. But once you have a lot of workers and a lot of capital, you need an improvement in technology. And that's the technology shifts the whole curve. So then instead of moving along the curve, you shift the entire curve up. And that's really where you get your best bang for your buck. The technology, right? So what the secret to the world, I think, guys, and I've been saying this for, how old am I? For 25 years, certainly, entrepreneurialism. Nice, huh? What a beautiful word. That's the secret to the world. And if you have government, in my opinion, it should support entrepreneurialism as a high priority. Instead of saying, this guy's rich, take some money from him and give it to that poor person. Oh, it's not his fault he doesn't have education. It's not his fault that he doesn't have any skills. It's not his fault, whatever, so let's give him some money. In the long run, I think that fails. So I wrote a paper at Harvard about how the government should make entrepreneurialism a focus. So like, let's say you're out of a job, but you can drive for Uber. You just got yourself a job. Boom. You don't even need a job interview. All you need is a car and a driver's license, right? You're like, I lost my job, but I can drive for Uber. So I've met people, I'm like, what do you do? And I drive for Uber. I'm out of a job, but I drive for Uber. I'm like, you drive for Uber? You drive for anybody else? Sometimes Lyft. Sometimes I deliver Amazon.com stuff. I'm like, really? Yeah, that's it. Like, it's great I don't know why the government wants to shut Uber down. I mean, maybe they're a scumbag company, but the whole idea, like, dude, you want to drive? Be a cabbie? I'd much rather that than have some guy that's paid $1 million for a medallion, and now you have to have taxi companies and stuff. I'd rather, let's cut through all that crap. Let's get to maximum efficiency. If there are cars sitting around and people out of work, why should I even own a car when I can just have some poor person drive me around in his car, right? Whenever I want, on demand. I don't have to gas it. I don't have to maintain it. I don't have to pay for it. I just want to go somewhere. Let's go. Let's get in the car. Let's go. Boom. Let's go. Right? So all of that improves efficiency. And just the idea that you can just take care of yourself, but you can't be on your own. You want society and government and everybody to support the entrepreneurial spirit for maximum efficiency. Therefore, you get maximum productivity, which means you get maximum standard of living, right? Which means you need to have education, you need to have the support system, you need to, all that kind of stuff. Support for the individual, but support for just the whole idea of being entrepreneurial. Schools educate you to be an entrepreneur. The government supports small businesses, so on and so forth. so that they don't have to have welfare. You can take care of yourself. Anyways, I gotta go. So, boy, we covered quite a bit, huh? Taxation on personal income and so, yeah. So I'll see you tomorrow, guys. Yep. Peace on earth. May the pips be with you. May your profits be above average. Tomorrow's Wednesday. We got oil inventories. I think it's Wednesday night, Thursday morning, where we have BOJ, isn't it? Yeah, but Ryan, sometimes the questions are really convoluted. I don't have one I can think of right away, but you really have to think about it, right? Like a simple one. Which of the following is most likely to improve an economy's productivity? Well, we just talked about that. Positive net capital stock investment, a decrease in cyclical unemployment, an increase in government discretionary expenditures, an increase in paid maternity leave, an increase in the velocity of money. Yeah. So I'm like, okay, I know all that. I know what they're asking. How do you improve productivity, right? Okay, I can talk. I just talked about it. I can talk about that all day, and then I'm like, oh my, what? The decrease in cyclical unemployment. Well, the increase in unemployment doesn't necessarily means there are more workers, but more workers doesn't necessarily mean productivity. But productivity, capital, and labor. So if there's a labor shortage, it would be unproductive. So could it be that? And cyclical, I mean, there's frictional and structural. What do they mean by cyclical? Well, that would be removing recessions. Well, that's related, but I don't know. Maybe okay, increasing capital is the other side, right? Because I just said capital and labor would increase productivity. But what the heck is a net capital stock investment? Okay, I get the capital part, investing into capital. But is that what it's saying? Why don't they just say increase in business capital or business investment? Positive net capital. So I'm like, maybe it's that. Because I know capital and labor increases productivity. So it could be A or B. An increase in government discretionary expenditures. Well, why do they throw in discretionary? Is there discretionary, non-discretionary? I'm like, oh, son of a. Now they're just, yep. What the hell? An increase in paid maternity leave? No. An increase in velocity of money. Money supply times the velocity of money equals price times Y, which is nominal GDP. So if you increase the velocity of money, that would increase. Yeah. Ah, son of a bitch! Stupid. It's an easy question. Just tell me how to increase productivity. I can talk about it for 40 minutes. But then, what the hell's the answer to that crap? Welcome to college. I can talk about it for 45 minutes, but I still don't know what the hell the answer is. Stupid universe. F you, Harvard. Yeah. So anyways. Right? But do you get it? Like, all of a sudden, I'm like, I don't know what the hell the answer is. I know everything you need to know about how to increase productivity. I just don't know what the answer to that stupid question is. Well, let's see if you know this college question, Ryan. What do you call a fish with no eyes? Smarty pants. Get that guy NBA. Yeah. All right. Peace on earth. May the pips be with you. May our profits be above average. I'll see you guys tomorrow. Yeah, sushi. Cat food.